Hi everyone, my name's Brent and welcome to Three Crowns Trading. Please support our channel and click on the subscribe and like button below. So we're going to look at gold again today, and basically the big concern right now is about stagflation. Are we entering a period of stagflation? So to talk about stagflation, we need to understand what it is. So in economics, stagflation or recession inflation is a situation in which the inflation rate is high, the economic growth rate slows, and unemployment remains steadily high. And if you think about what's going on in the world right now, the inflation rate is high. I'm sure we'll go into the shops and food is increasing in price, petrol is increasing in price, most consumer goods are going up. And another interesting thing I notice is they talk now about inflation being transitory. However, when you actually have wage increases, and a lot of wages now are increasing, you can always reduce the price of food into the future if inflation is in fact transitory, but you can't really bring wages down. So when wages go up, you have to think that inflation is here to stay. If you look at the economic growth rates right now, it is slowing. Even though they're pumping trillions of dollars into the economy, growth rates are slowing, and that's a concern, and unemployment is still remaining steadily high. In the States, when you see the weekly unemployment rates come out, it's amazingly high. It's not coming down, the unemployment rate, like the governments and countries want right now. So that basically tells us that we are possibly entering a stagflation period. So what do we do with our investments during stagflation? I've been putting together a few videos about gold, and this is another one, because gold is one of the best places you can invest during a stagflation period. From 1976 to 1980, when we had that whole 70s of stagflation, and the Dow just wobbled up and down, gold went from $100 to $650. Not a bad gain in 4 years. Food generally goes up, energy goes up, and you've seen that occurring already. Okay, so stagflation, as I mentioned, in the 70s, this period here, we had huge stagflation, and this green line is the Dow, and this yellow line is the gold price, and look how much it went up. It just shot up a huge amount, especially towards the end of that stagflation period. So this article here, it basically mentions the pluses of buying gold in a stagflationary period, and it basically said during that period, gold actually went up 25 times. So if you are interested in investing in gold, now could possibly be the time. So if we think about the Dow, it's been so high. I mean, look at the run-ups from here compared to here. It's hard to see this just shooting up higher at any time soon, because you really need a catalyst for that to occur. And we had ESG, all those sorts of the movements up in tech, but they seem to be tapering out and even going down in price. And a lot of the old economy was overlooked, like oil and gas, gold stocks, they were overlooked, and you see them coming back into favor now as people are moving out of the overinflated ESG stocks. I showed this video earlier, so this is the gold price. We had a lovely run up here. We've had a decline since August last year, and here was a point where we had a change in trend, and since this point here, March, April this year, the gold price has actually steadily gone up, and we have a diverging triangle here occurring. So generally what happens as we get closer into this point of divergence, either the gold price should shoot up or shoot down, so down through the support line here or up through the resistance line. Okay, so in the last videos I compared some gold companies. So if you are trying to avoid stagflation, gold, as I just showed you, is possibly a place to be. So here we have some actual gold stocks, and I put some gold stocks on a gold price chart, and over here was where we saw the gold price change, that change in trend I showed you on that previous chart. And what happened from here, the gold price has been actually trending up. It says it's down 7% for the year though, but that's from here. But from this point here, it's actually been trending up nice and gently. And however, as you can see here, most of these gold stocks have actually been trending down. The worst of all of them is Regis Resources here. That's down 45% for the year, whereas gold is only down 7% for the year. The second worst is Northern Star Resources. That's down 34% for the year. Newcrest Mining, another Australian gold producer, that's down 17% for the year. And whereas Newmont Corporation, they're down about 8% for the year. So a lot of the Southern Hemisphere mining companies right now seem to be better buys than a lot of their Northern Hemisphere rivals. So if I was looking to get into any gold stocks right now, these are the three I would possibly be looking at. And I mentioned these stocks 2.5 weeks ago. So on the 30th of September, this is the stock price of all of those companies. And as I showed you earlier in some earlier videos, the PE of these companies is fine. Debt to equity is reasonable. Dividend is fine. And what's happened since I first mentioned these stocks? Newmont's up nearly 1%. If you look at Barrick, it's up nearly 2%. Newcrest, a bit over 1%. Northern Star Resources is up nearly 4%. Anglo Gold is up the most, it's up over 15%, and Regis Resources has climbed nearly 10%. So they've had a nice little return just in 2.5 weeks. So these are obviously stocks that are still undervalued. They've got reasonable PE. If I was looking at investing in any gold producers now, because I was concerned with stagflation, this is exactly where I'd been looking. Another thing to consider, so the governments have been pumping trillions of dollars into the economy, as I mentioned, and that wasn't the plan. In 2018, the plan was to reduce the Fed's balance sheet and taper it down and have purchases down in this sort of range. However, that's not what occurred. What has occurred is the purchases have actually increased, and as of filming, the Fed's balance sheet is actually at $8.3 trillion. It's gone up $3.6 trillion since March alone last year. So you can imagine how that's pushing inflation up. And the Fed is in this horrible position, whereas if they raise interest rates, it's going to be difficult to pay off their debt. So they're in this horrible position where they're in a way they can't raise interest rates. They're trying to reduce quantitative easing, but it's going to be a tough push from here. So you probably are going to see continued inflation in the future, in the near future, and you're going to see the economy slow down. So you're going to basically see stagflation occur. And if you think about the S&P, that's gone up. The highest this goes is 3,600. The S&P right now is 4,391. So it's huge right now. It's hard to justify saying that the S&P is going to increase anymore. So there's your slowing in the economy. The last thing here, so if you think about the Fed compared to the ECB and the Bank of Japan, their balance sheet is only 37% of the GDP, whereas the ECB and the Bank of Japan is a lot higher. So if I look at a chart like this, I think to myself, they can keep producing money because they're nowhere near these other countries in their money production. So that will continue to fuel inflation and continue to support stagflation. So for me right now, I'm looking to put my money in somewhere safe. And gold, considering the prices of some gold stocks nowadays, and considering what happens in a stagflationary period, gold for me is a fantastic place to put my money to weather the storm that could be coming.